What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is July 1st of 2022. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, we're going to be talking about what may be just one of the best market indicators we can utilize in order to spot a solid entry coming out of this bear market and preparing for the next bull run. It's not an objective of trying to capture a falling knife and trying to predict the absolute bottom, but rather find a safe entry point down in capitulation territory that can easily set us up in a comfortable position to ride the next wave. We've got a lot of other topics as well to dive into in today's video, as well as a sponsored review of the Naga platform, a leading fintech and cryptocurrency exchange platform. So stay tuned, you won't want to miss it. And if you like the video, consider dropping a like. All right, guys, let's go ahead and kick off the conversation. So what I want to focus in on before we dive into our preferred time frame, which is an important component in this conversation, I want to focus on the metric itself, the 200 EMA. Now, all the while here, there are some differences between moving averages, which you're probably familiar with more of, and those also do hold extreme relevance as well. We're focusing today on the exponential moving average. To simply explain what moving averages generally are, moving averages are taking the closing value of a given candle or set of candles over a given time frame. So for example, if we were taking a look at the daily time frame and we had the 200 hourly moving average, this would essentially take the closing price of the last 200 hourly candles and print them on the chart at that given time frame. So we can see here how as price declines over time, the 200 EMA starts to come down and follow price. And not only that, but it plays a very high degree here of relevancy when it comes to shorter term timeframes and longer term timeframes. So for example, those who have been probably trading the short term here, after the rebound from around $880 for Ethereum, driving all the way to $1250, we can see that this was really the first point of resistance here. We weren't able to get a solidified hold of support here or really blow past this 200 EMA here, and therefore it started to act as resistance, dragging price down nearly 20%. And then afterwards as well, when we came up to retest it, we were able to hold at this range here for a multitude of hours, making it support, leading towards the secondary wave and Ethereum going all the way up towards 1280. And afterwards, not being able to hold this range, we collapsed lower and dragged all the way down from that previous high at 1280 down here towards $1,000 for Ethereum's price. Now, this is just the 1 hour time frame. It's one of many time frames you can utilize moving averages as a way to see where buyers or sellers are in regards to the confidence of driving price higher or driving price lower. But all the while, as with anything, it's not perfect. We need to start zooming up towards longer term time frames to really start getting the value or the bang for our buck in spotting capitulation, which is our key goal here. We're not entering into the fool's game of trying to pick an absolute bottom. We're trying to find when price has based out, when it has reached that phase where buyers and sellers are practically neutral, and sooner rather than later, we are going to see buyers overwhelm and drive the next cycle, where demand outweighs supply. That's what drives every market cycle. And in today's video, we're going to be focusing in on the conversation on the 4 hour 200 EMA. Now, what's really interesting about this metric is the relevancy it's been holding not only in the current cycle, but also in previous cycles. If we take a look here, over the past few months, since back here during April, when we broke below this EMA, it's been servicing as resistance practically the entire time here. We haven't been able to hold 2 to 3 4-hour candles above this range as far back as April. And every time price does come up to retest against this again a declining 200 EMA, it is serviced as resistance. And this is a repeating pattern that we've seen even back during previous mid-cycle corrections as well as the previous bear market. So let's go ahead and dive back into history here. Let's take a look back, not just at the mid-cycle corrections like the one we saw back in May throughout July, but I want to go back way towards the bear market from back in 2018. And what's really interesting here is that all the while price had dropped at a more significant pace than after pushing sideways for a much longer period of time in the market, we can see here that not only the 4-hour 200 EMA was a great metric here for short-term swings during the bear market and knowing when a lot of these relief rallies were weakened, but it really holds significance in how it played a key pivotal role in understanding when the bulls had taken over the bears. This is what we care about here, because all the while markets are declining here, we don't really know how low they can go. We can toss price predictions. We'll talk about some of those levels later on that might be interesting to watch, but no one really knows exactly when the market is at an absolute low. And trying to chase that bottom is a foolish objective. What we should be looking for here is trying to find a safe, comfortable entry, one that could allow us to have a safe entry into the market, not only so we're not emotionally trading and facing declines more than rallies in price, but on top of that as well, if you're looking to trade with leverage here or have some kind of increased exposure, all the while I don't advise it for most people, this is what you're going to have to do. You're going to have to wait for the later stages of capitulation, not trying to pick an absolute bottom so you don't face as much volatility. Take a look here at this 200 EMA on the 4-hour chart. Consistent resistance here for multiple months. We saw here as well that there was some short periods of time where we broke above there. We weren't able to climb higher here. We're setting still lower highs, and we quickly would break through this key metric here. Only until here in February did we start to make it new support rather than resistance, a clear divergence here in the previous trend. And every time we would break out higher and pull back, we would come down and see buyers using this as a new entry point, only then to lead towards the major breakout here on April 2nd of 2019 that practically confirmed that the bear market was over. I remember being there that day, and when I saw that price action, I knew, well, I should have bought more Bitcoin. I wasn't stacking hard enough. And that's the key thing that we have to keep in mind here, is that the 4-hour chart is a very significant time frame for a lot of traders here. Most institutional traders or traders who are managing portfolios of hundreds of millions of dollars do not care about the 1-minute chart. They do not care about the 5-minute chart because they have too large of a position or liquidity in order to really care about that. What they care about is capturing the next wave. What they care about is getting in at a solid entry where they can use healthy degrees of leverage and exposure to really make the most out of the broader cycle returns. Now, this is not only relevant here for Bitcoin, but it also holds relevancy here for Ethereum. So let's go ahead and bring it here to the 4-hour chart. Again, same exact scenario here, and since April of 2022, we've been using this as resistance, and we haven't even had an attempt to come up here towards the 4-hour 200 EMA. We might get a chance here over the coming days if this rally continues here, but time will tell. We have to be patient and see if we get an attempted retest here. But if we take a look back at the previous cycle, we go all the way back here towards 2018, you can see just how relevant this indicator was. From here at $680 when we had broken it as we were attempting to treat it as new support, from there on out we continued downward and downward here with no sustained support above this metric, coming all the way down to $83. That also played significance here when it came to support back here in January 2018, breaching that support, treating it as a failed level of new support here, and therefore resistance after, dragging price down to $367. A lot of key relevancy here when it comes towards this market metric, and we're seeing the same play out here. So I think that this is a great tool for your arsenal here. And when we're talking about this correction here, I know a lot of you are still wondering, Nick, all the while there's the 4-hour 200 EMA, there's a lot of other metrics out there that might be signaling when we could be expecting a good entry. Where is price heading here over the next few days and weeks? Well, I'll be honest with you guys, no one, including myself, has a magic ball. But I want to go ahead and just set some expectations here, right? We are likely, according to history here, probably going to see one last flush in the market. Again, it's not guaranteed. We're going to see really be tracking here and trying to keep unbiased and watch what happens here with the 4-hour 200 EMA as well as many other metrics here in the market. But I want to go ahead and talk a little bit about where we could be heading here. What I think is really interesting is that sometimes the most simple analysis in markets really tends to be the one that pays off the most. I don't know what's going to happen in the next day or two, but I can tell you all that according to history here, we probably have got one last monthly candle of decline, which may see quick buy-side interest here coming in to support price. So what could that be here? Well, let's take a look here at history, a very simple way to kind of analyze price. And we can see this much easier when we toggle on the log scale here. Price generally averaged here for these preceding months at the bottom of Ethereum's price here in 2015, around roughly 80 cents. You could see here, for example, that we were at 0.6 cents or here at $1.20. Either way, around this range here, we were at roughly around 80 cents. And then here, at a midterm range of support here for Ethereum, really interesting, at a 10x value from that range, we saw new support at around $8, right? Then we can take it here towards the previous bear market. Many of you probably remember here when Arthur Hayes, the infamous founder of BitMEX, one of the big derivatives platforms, called Ethereum a double-digit, I won't use the language here, but a crap coin essentially, right? So we can see here that as buyers came in, it was around this $80 range here. Well, look at what we're getting real close to testing and what we got very close to testing here back in early June, the $800 range. Not only a resistance point here back in the month of May 2018, very close to the previous all-time highs, but very close to price here. Could we be seeing buyers coming in around this range here and providing new support for Ethereum, holding higher Bitcoin low comparatives than the previous cycles? I don't know 100% to be honest with you guys, but I think that this is an important range to watch. And the important thing to understand is that with this further downside, we can at least acknowledge that there's a good chance it can happen. We can stomach it. We can prepare for it. We'll keep an eye on this 4 hours. We'll continue stacking cash at the moment. There's no need to rush into anything. If anything, dollar cost averaging is the answer right now. As we told you guys before in this case, in the previous videos, again, we're at that territory here where DCA does make sense. It makes sense to passively invest in. The harder price goes down and the more time prolongs here without formulating a clear bottom, we can start to pick up that DCA activity, right? Again, not trying to pick an absolute bottom, not trying to go all in, but using dollar cost averaging, using those signs like the 4-hour 200 EMA to see when the trend reversal is formulating. That can help us to stomach adding new positions into the market and really get to reap the rewards of the next move in the market. And I think the same goes here for Bitcoin. We can see here that with Ethereum, we've been having generally 10x multiples here in valuation each and every time from these lows. And for Bitcoin, we've been seeing generally declining returns over time here, right? Many multiples lower each and every time. And now we're coming into a favorable range here around 16,000 to 14,000. That would be pretty much in line with the increments of decline we've had in the past. So I think that this is, again, something we need to keep an eye on. We need to not get too caught off guard by the volatility and the uncertainty in the market. And I understand the macro environment, and just slowly start to passively enter into the driver's seat, getting ready for the next move. And from there, we'll have that market strength come back for existing positions. You can start to de-risk. And on top of that as well, your new positions will benefit as well. That's why maintaining a longer term time frame, not getting caught 2 steps behind, will probably end up paying better. Anyways, guys, let's go ahead and dive into this review of the Nagacoin platform, which could be a good way for you guys to make your entry into the crypto space. Alrighty, everyone. So in today's sponsored review, we're going to be taking a look at a platform that many of you may already be familiar with from its previous larger platform, the NagaX Exchange. Now, many of you have probably heard about Naga.com, which has been one of the biggest copy trading platforms out there in the crypto space that allows you to not only copy trade, but get exposure to a wide range of assets and trade in various markets, from cryptocurrencies as well as stocks and Forex. But I want to go ahead and spend a little bit of time to talk about the new platform today, NagaX, and what it offers to those in the crypto space. What I think is really great about NagaX comparative to the traditional Naga platform is that it's really focused on offering a whole new set of features centered around the cryptocurrency space. Now, again, there are other types of markets and exposure that we can get access to, even including things like its NFT marketplace, but I want to go ahead and focus in on probably what is most relevant for you guys here on the channel. Now, first off, what's really interesting interesting is that when you open up NagaX here, when you have a registered account like I've got here, you can see that we're opened up here on the feed, getting a nice scroll over or ticker symbols for a lot of the leading cryptocurrencies with the respected charts, as well as some featured posts talking about news in this space, keeping up to date with current events, and of course a whole range of social posts here that we can start to learn about market sentiment and what people are thinking about within the crypto sector. So that's the first key element here, but I want to go ahead and dive straight into the trading experience, because for me, this is what really matters most here. Being able to adapt my trading screens and being able to actually set things up in a way where I can go about making the best trades and positions in the market here. So you can actually customize your dashboard here and start to size and position things in a way that's fitting towards your trading style and your comfort level. And as many of you are probably familiar with here, it's not rocket science, it's nothing too crazy here. We can see that NagaX gives a really nice, minimalistic, and clean experience to set up the proper trades you like. In my NagaX wallet here, that I've got here on the platform, I've got about $1,000 worth of Tether. So I'm going to go ahead here and actually go over back to the exchange panel and place a trade here. I'm up on the BTC USDT pair here, and we can see that there's a good amount of trade volume here. We're going to go ahead and place a buy position here, right? Just to kind of showcase actual trade execution. So let's go ahead and put in a limit order here to buy some Bitcoin here around 19,600. I'm going to go ahead and specify our bid here for the limit order we're placing, and we're going to go ahead and buy 50% of what we can afford here. Okay, so go ahead and drag that here to the 50% level. Good till canceled, and we're going to buy some Bitcoin here, and we've got our order placed here. Hopefully we'll get it filled here in the next couple moments, but this is again a very typical trading experience here that you'd come to expect here, giving you all the standard order types that you'd really want to utilize when actually going through. You can also as well set stop limits here to protect yourself here, or stop market orders in order to help protect your position here. And we can also go back as well and go ahead and already set in our limit order here to essentially take profits inevitably later on in the trade in order to have our risk and reward profile established from the get-go. Now with NagaX, you're not only getting access to its exchange services, which work as intended and really can allow you to get good trade execution, but outside of that as well, a whole range of other services that makes NagaX more of an all-in-one cryptocurrency platform. You not only can check your balance, where you can see all of your assets through the crypto wallet tab, and as we can see now, my bid has gotten filled. I've got some skin in the game here on Bitcoin in my NagaX portfolio, but outside of that as well, a whole range of other services, from its new NFT marketplace, its upcoming launchpad, as well as resources like the Academy and FAQ, and staking services in order to get yield on your crypto. Now I do understand here, guys, that right now is a pretty volatile time when it comes to a lot of the lending and borrowing platforms that allow you to get yield, or general staking services overall. So if you want to wait, it's something that's entirely voluntary. You don't have to participate in the staking services and take on the additional risk that may come with that. But Naga so far has been able to process withdrawals smoothly, from what I've heard, and outside of that as well, is paying generally within line yields that you can get within the market. Typical lending borrowing rates here for people who might be wanting to borrow altcoins or cryptos to short effectively. And you can also get additional yield with the Naga coin. But again, in my personal opinion, I would focus mainly on the exchange services right now. A lot of these features might really come in handy in the coming months as you get more familiar with the platform, such as the NFT marketplace here, which right now is on a separate web platform tied under the NagaX brand, but will soon be coming back into the core website and allow you to get access towards a whole range of available NFTs within the market, if that's your bag when it comes to investing. So we can see that we've got a whole range of different things, hopefully more details on the launchpad coming soon. But with the access to the feed, the crypto wallet, staking services, the exchange itself, and on top of that, a whole range of other different features, we can see here that Naga gives us a good avenue into the cryptocurrency space to get access towards a wide range of cryptocurrencies. It allows you to get access to dozens of leading crypto assets so you can diversify your exposure or take on many other different trading opportunities than just trading or investing in Bitcoin or Ethereum. And it gives you a really clean, smooth user experience to get into the crypto space right. So if you're interested in getting started with a NagaX account, it's really simple. All you got to do is click the link down below in the description and start registering an account today. But on top of that as well, you guys can also access a whole range of really important features that I think are important when you're going on beginning your crypto journey. If you want to go ahead and just buy crypto directly from NagaX, they have a credit card on-ramp, allowing you to use your debit or credit card to be able to buy a certain amount of cryptocurrency and deposit straight into your NagaX crypto wallet. But on top of that as well, if you run into any issues or questions about the platform, you can not only dive into the Academy and FAQ, but you can also reach out to their customer support chat. A huge plus here that I wish more cryptocurrency exchanges showed an appreciation for. Support has saved me more times than not in crypto and is one of the most underrated value propositions of a lot of these crypto exchange platforms. Now, if you also want to manage your funds on the go, you can also set up a NagaX wallet where you can actually manage your balance on the go and take a whole range of different moves on the market on a lot of your different positions. So again, check out the mobile wallet if you do register for an account. You can dive into some of the details around it. And last but not least as well, I just want to point your attention here towards the Naga coin. This is the protocol utility token for the platform. So if you guys are interested, you can check out that and learn about what ways the Naga coin can help you in paying lower fees, similar to the BNB token on Binance, and access a whole range of different features when it comes to staking and other services. But that being said, everyone, I hope you all enjoyed today's video. If you liked it, consider dropping a like, consider subscribing, hitting that bell icon if you haven't already. But until the next video, everyone, I'll see you all in the next one. Take care and have a wonderful rest of your weekend.